just ask you a general question first on the third quarter. A lot of turbulences in the markets, a lot of up and downs, I guess, in terms of volumes as well. How have you lived this third quarter?
I think the good news is whether you look at Europe or the United States, politicians, government authorities now fully understand the need to send a strong message to investors that the debt situation, the debt overhang is well understood and it's being tackled, it's being dealt with. So that's the sort of first part of the story is debt and the debt issues either are or will soon be resolved. The second part though, where I think the jury is still out and markets still basically are putting up a big question mark, is where is growth going to come from? What is going to be the pro-cyclical growth strategies, economic growth, fueling a recovery in the job market that politicians both in Europe and the United States are going to promote? And there, it's obviously a complex issue, but we strongly believe at the London Stock Exchange that old financial asset class, equities, is now being rediscovered because it is fundamental to powering and financing innovation. And we feel very strongly that salvation, if I may describe it this way, in terms of job growth and economic growth, will come from the small and mid-sized enterprise segment. And equity is the appropriate tool, is the proper financial way of stimulating growth in the SME sector.
So you think like we're seeing a shift towards the equity market?
I think we're rediscovering that regulatory decisions that were made in the last 10 years were very unfavorable to the equity market, but we're also discovering that the tax system, which particularly in Europe, provides on one hand deductibility to debt investments, and on the other hand clobbers equities through dividend taxation, capital gains, corporate tax, and we're now talking about a financial transaction tax, that the heavy weight of taxation on equities is actually hindering liquidity capital formation, and this is particularly grave in the case of SMEs. SMEs are particularly dependent on equity funding.
Let's talk a little bit more about London Stock Exchange now. Takeover of LCH ClearNet, how is that working out, and you're confident it will go through? Well,
first of all, it's not a takeover, it is a partnership that we are proposing with the banks that today represent 80% of the ownership of the London Clearing House and a number of other corporate shareholders. I can't obviously go into detail, as you will imagine. I can certainly confirm what we've announced a little over a week ago, is that we are now in exclusive negotiations. I cannot go beyond that, other to say that we see this as a new project, something actually quite new in the exchange industry, which is the creation of a fully fledged partnership between an exchange and a core group of international banks to create a very strong clearinghouse, strong not only in Europe, but also in the United States, and one that hopefully will be able to successfully compete with Deutsche Börse and ISE, which is the current consolidation theme in Europe, and which we believe will become an enormous monopoly if it is allowed to proceed with its merger as currently envisaged.
What about LME? There were reports as early as yesterday that you are going to do a joint bid with Singapore for the LME.
Yes, you mentioned these reports. You might have said that they are unconfirmed press reports since we haven't said anything. So unfortunately, I will disappoint you, but I will not make any comments as regards the LME.
But it's an interesting asset, LME.
I can certainly describe the LME. Others know it very well as well, but I'm afraid I can't comment on the LME.
But before that, I mean, before LCH ClearNet and before knowing more what you're going to do with LME, we had this failure to merge with TMX.
Yes,
that didn't go through. So where is the LSE positioning itself to really rival all the stock exchanges, especially New York, NYSE, Euronext?
Well, the Canadian transaction obviously didn't pan out. It was a friendly transaction, approved by both boards, and I guess the jury is still out as to whether the the competing national project put forward by Maple will go through or not, it's not for me to comment. We've moved on. We do believe, though, that the LSE remains in a very strong position. If you look at our economic performance, market share performance, alignment with the client base, which is fundamental to us, striking partnerships with our core group of clients, look at the progress in platforms like MTS in the bond market, platform like Turquoise, which has quadrupled its market share in the last 12 months. The LSE, I'm sorry, you confused me with your earlier question. The LSE is doing very, very well. Again, in terms of market share as well as economic performance. But we do think that there are a number of areas, and we've said that publicly, where the company could speed up, turbocharge, if you will, its growth internationally in terms of distributing its product, and also creating an even bigger and more credible competitor to the Deutsche Börse NYSE merger project. And in that respect, we feel that our partnership with the banks, with Turquoise Derivatives, presents a unique opportunity. So we feel very good, very confident about the future. We are a mid-sized company. We're ambitious about the future. And all I would say is, watch the tape. There's more to come.
So what else? Where should we expect things to come? Like we're in Russia, would you consider, for example, a tie-up with MySex at some point?
Well, I wouldn't be able to comment on any things that we're not ready to announce. I'm sure you'll understand that. But we do see MySex RTS, and we hold Ruben in the highest esteem as a natural partner. There is a large amount of Russian business that gets done in London, not just equities, by the way, but also bonds and derivatives. So there's a natural partnership there. Beyond that, obviously, I couldn't comment. But our philosophy, if you want, our sort of cultural approach as a company, our business model and business culture, is that of establishing partnerships, friendly transactions, as we did in Canada. We're not a hostile company. We do not have a hostile culture, a cooperative one.
So from that and from what I think you've said in the past, you're both looking east and west.
We need to. We will continue.
Where's the focus, though?
Well, the focus is in terms of distribution. Our IPO business is a very global one. You mentioned the Russian business, Chinese, Indian, Southeast Asian, Middle East, Africa, Latin America. So the company is already, the LSE is already a global firm, certainly in terms of its IPO and primary capital markets business. We will continue to look at opportunities to strengthen ourselves in derivatives and in post-trade, as we've said publicly at many investor meetings. And we will continue to look at developing our distribution capabilities in the Western Hemisphere and in Asia. That is obviously a long-term project. But in spite of the recent setbacks that I think it's fair to say, not just the LSE, but the industry has encountered in terms of merger or other forms of strategic cooperation, we think the medium to long-term trend is towards enhanced, increased cooperation between regulators, harmonization of prudential regulatory standards, G20 type processes, IMF processes. So if regulation, if prudential regulation, if government cooperation in the area of financial services increases to the point where regulators no longer compare notes but actually design global standards, then the ability for financial infrastructure companies like us to build a global distribution, either through network or through organic or non-organic opportunities and initiatives, that will increase. So we think future trends will reinforce the need for our industry to globalize, whether it's through consolidation or organic growth. That will depend on opportunities, of course.
We're in Russia, and I want to have your view on this. Russian stock trading in London has outpaced volumes in Moscow for the past year for Russian companies. Do you think that's unnatural? Do you think that's not normal? And what are the challenges at the moment? They want to create this big financial hub here in Moscow. Obviously, there are many challenges for that. Why are Russian companies actually choosing to go to London instead, and what can be changed to prevent that? Although for you it's better, I guess, for business.
Well, I think you'd have to ask Russian companies themselves. But again, we have a lot of respect for Ruben and his team. In fact, we support actively the establishment of a global financial center, an internationally attractive financial center in Moscow. This can only be beneficial to Russian companies, be they financial services or corporates, and also beneficial to us because what we bring does not compete with local capital markets, with Russian capital market. We bring additional sources of finance, a complementarity, if you want, in terms of skill set, types of capital. We're here to complement, cooperate with, not compete with. And it's in that sense that I think both Russian companies are very comfortable. They very much want to see and support the growth of a domestic capital market. This is very important to them. You might say that we provide additional finance today to help accelerate, turbocharge that development trend. There are masses of capital required to help continue to build and support growth of infrastructure companies, of energy companies, of extractive mining industries. So there's clearly a very positive contribution to the growth of the Russian economy, which is provided by the London capital pool. But again, this is done in a cooperative fashion, not a competitive fashion.
Final question, I mean more general again. What's in your view the main problems that the markets have at the moment?
Globally, or
yeah,
I'm going to try to keep this a very short answer, because this could be a very a dissertation.
But if there was one problem, what's the main thing we should worry about in terms of markets turbulences in the weeks and months to come?
I'll leave one thing with you. What probably today is hindering the return of confidence, other than the macro issues, overhang of debt, is the uncertainty around regulation. The pace of regulatory change in North America, in Europe, and elsewhere around the world is so extreme, is so massive, that investors are actually holding back. There is no shortage of capital today. In the United States, $3 trillion of unused funds are sitting on the balance sheets of corporations. In Europe, we believe it's about €1.5 trillion of cash sitting in bank accounts held by corporations alone, and that excludes the financial sector. And part of the reason why that capital is not being invested more aggressively is massive uncertainty over regulatory change, and that includes fiscal changes. For example, we hear rumors of financial transaction tax being implemented in Germany, for example, or in France. Now, that certainly will prevent or hinder investment decisions from financial practitioners who need liquid, low-cost, low-frictional cost capital markets. I think it's regulation. And what we probably need at this stage, I don't think we'll get it, what we probably need is a moratorium on additional financial regulation. What has already been, what is in the pipe, if you want, is being looked at by legislators and regulators, obviously needs to be completed. But then we need a moratorium. We need things to settle down a little bit.
Great, thank you very much.
My pleasure.